I'm not gonna lie, feeling a little FOMO here with gold. I did take profits on the gold trade, which was a really nice trade, but come on, gold did me dirty here. Look what it did. I got trailed out of my trade right here, and then it just said, now we're really going to run. Now that Nick's been stopped out, let's really make the move. I can't complain. I had a great trade on gold. I wish I had more of them like that. That would be awesome. But closed out of the gold trade, currently watching it drift away higher. And a lot of people are asking, man, this is what I've been saying, guys. A lot of people have been saying, look at gold. It looks overbought. It looks overbought. Well, if you keep saying it looks overbought, it keeps ripping higher. It doesn't change the fact that it's still in an uptrend, right? This trend is just so strong. Gold is so strong right now. Gold and silver, for that matter. Look at silver. Silver's about to hit $30 an ounce. That is incredible. That is a multi-year high, if I'm correct. Yeah, that beats out even the highs of 30 is the highs of 2021, which is when we saw silver go absolutely crazy last. So we are just nearing not the all-time highs, but the highs of 2021. So silver's on the move, gold is on the move. I mean, look at that gold chart. Could you not get a prettier chart than that? That's just a lot of green, just how I like them. But I'm not in the gold trade anymore. I missed out on this last little leg. I'm feeling a little silly. But at the end of the day, you can't play them perfectly. You can always, no matter how good your timing is or your strategy is, you're not going to be able to play it perfect. I was long here. I longed again here. So I had two different trades, 1 and 2. So I definitely caught majority of this move, but it ended up closing out on this red candle. And will this thing pull back? Yes, it will pull back. But I've been saying it over and over. My new phrase when it comes to when trends are going crazy like this is, if you're looking for a reversal, don't hold your breath, because it will take some time. This gold chart does not want to pull back right now. And until it does, you just sit on your hands, stay on the sidelines. Guys, we got some exciting news out of the Edge Finder. It's not fully ready, but we're very close to having, it's ready. It's ready, guys. We've got new assets on the Edge Finder. You guys ready? The Russell 2000, one of my favorite things to trade, is now on the Edge Finder. But not only that, we talk about silver enough. It's time that silver gets added to the Edge Finder. Right? Yep. So silver, copper, the Russell added to it, platinum. It's very exciting. We got a lot of new assets being added. You'd be surprised, man. The work that goes into just adding a new asset into this thing has been crazy, because you have to add all of the data for all the different points. And we have a wonderful team behind the scenes. Shout out to Frank and Giles, who have been putting that stuff together. But we are now looking at getting some new assets on the Edge Finder, which is so exciting. NASDAQ is still bullish overall. This makes me wonder, do I buy the NASDAQ? Is it ready for a dip buy? And the answer to me is not yet. However, why is that? Why am I still cautious on the NASDAQ? Well, inflation data was hot. And this really, to me, signals that after this big run up, which this big run up happened on, the idea that the Fed was going to cut rates and things were going to be great. I mean, we can ask Powell about this. Powell, what was how's the economy?
The economy is strong.
Okay, so the economy is strong. And, we've seen
making progress.
We've seen progress. And so we're doing well overall, right? But the problem is that the inflation stickiness is going to cause the Fed to stay higher for longer. At least that's now becoming more obvious to the market, right? The market is now seeing that, look, inflation is sticky. Let me show you on the Edge Finder why we've got all this cool data. Why not use it? So we're looking at the dollar. Okay, inflation came up higher than expected again.
It's our Edge Finder anniversary sale. If you want 40% off the Edge Finder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our smart money indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edge Finder anniversary by grabbing yourself a copy today on our website, a1trading.com.
Anyways, NASDAQ just down just shy of 1% on the day, S&P 500 pulling back. You know, I'm very curious. I've made this point throughout the week. I'm curious to see how the S&P holds up at this level. We are coming back, it seems like, to test yet again, despite yesterday's bounce on PPI data, right? PPI data came in cooler than expected, gave the market a little bit of something to celebrate. But I can't help but, draw this simple trend line. I don't really use trend lines to make, entry decisions or anything like that. But I saw somebody point this out and I gotta show it too. Support, right? Upward trend. But then recently we've broken that same momentum. Clearly the trajectory is not the same. So now are we in a downtrend? I think it's a little too early to say that. But we at the very least have changed from just a dominant bullish move to now we're seeing sideways action. So I think the prudent thing to do here is to wait for, I got to use this one, is to wait for a good candle to break one way or the other.
Perfect candle. Oh, that green candle right there.
Right. So we're waiting for a big green candle or a big red one, but something to clear this range of resistance and support that we're in. So that's what I'm watching on for the S&P. Same thing for the NASDAQ. You've got this range of resistance, this the supply zone up top. You got the support zone down here. So we'll keep watching it, but that's kind of what I'm looking for, is a breakout one way or the other. In terms of the indices, I would say my net bias is pretty neutral right now. Now, in terms of oil, I am still long oil, and this is working great. Oil's actually playing games or playing ball now. It was playing games, going back and forth for a little bit. Seems like it's now making some nice follow-through moves to the upside. And I've got my stop loss trailed below this wick low. Look at how resilient this level is, guys, on the 4-hour chart, okay? The 4-hour chart has held so strong, and now we genuinely have another green candle.
Perfect candle. Oh, that green candle right there.
Right, exactly. So with the market ripping like this, I'm going to stay long. Nice little breakout here, this downward structure that was forming. You had consolidation, beautiful breakout. So I don't know why oil is up. I'll speculate though, something's going on, because you got the VIX up here 11% on the day. You got oil up, you got the dollar index up, and you got yields falling. So something tells me that would signal, my best guess is something geopolitically is going on. Can anybody confirm that? Can anybody confirm that we got something geopolitics wise going on? The Russell's down, less than the others because yields are actually down the day. Oh my goodness, how did I not see this already? Dollar index is flying here today. Beautiful breakout here today. Again, higher lows coming into this market. It makes me want to make sure I can find some long entries on the dollar if I've got any. Let's go take a look at the top setups page here really quick. So USD CAD, let's filter really quick by major currency pairs. We got USD JPY, we got dollar CAD, dollar Swiss. Wow, we've got a lot of dollar setups here today. Aussie dollar, Kiwi dollar, pound dollar, euro. Aussie dollar is the only one. The Australian dollar against the US dollar is the only one that is neutral of the list. We've got to do some currency trading real quick here today, guys. Let's take a look at USD CAD first. I think Frank was pointing this one out. Frank saying
perfect candle. Oh, that green candle right there.
I think he literally said that word for word in his analysis. He said something about a perfect candle. I think I might have missed something here this morning. Okay, here it is. Here it is, guys. This is what's moving the stock market, or could be, at least. JP Morgan came out. Let me see what's going on here. How are the financials doing? XLF is the financial ETF. It's not moving that much. JP Morgan stock. Oh, JP Morgan missed or something? What happened here? Okay, so they didn't miss, but they might have guided forward things that were looking not so good. That's not necessarily great. It's not great for the stock market. The financials are a key component to, well, the NASDAQ, the S&P, all of them are it's important that the financial companies are doing well. So we did have earnings reports this morning for several financial names. Seems like not so hot. S&P down slightly here today. I mean, it's not necessarily like the NASDAQ, man, is so strong. Here's the Dow, though. The Dow is breaking through support here as we speak. The Dow has been the poor performer of the three here recently. Middle Eastern conflict as expansion. Let's hope not, but it does seem to be potential. I mean, all the signals here with if you know like the landscape for what geopolitically charged events does to markets, you know that this is screaming geopolitics today. Bonds are up, so people are jumping into risk off assets. So they're in bonds, jumping into oil, right? Commodities typically tick up in terms of war concerns. Gold, 2,400 an ounce got tagged, I think. Did it? 2,400? 2,400 might have been tagged, which is kind of crazy. Congrats to the gold bulls who kept into the trade. Like I said, I got trailed out. I took profits. I should not complain one bit, but that's the issue with trading is you're never going to be perfect. And sometimes you take profits. You feel like you played it perfectly and then it just shoots past where you thought. This is why, I think trend following is just the way to go for at least my trading style is to stick with what's working.
Yes, today the market is going crazy, man. Firstly, on the dollar, it's also very aggressive. It's too strong. Gold, it's also following the same movement. So oil, it's also moving aggressively high. So on this, I think gold, US oil, and silver, or the other ones that you just mentioned, I feel like maybe it's because of the tensions in the Middle East. I think maybe that is the main reason. And for the dollar, we saw some few events. CPI was also like hotter than expected. So the rate cuts thing, I think it's now evaporating quite slower, even though they said they're still gonna keep that expectation to cut the rates, but it seems like we're slowly going away from that.
Yeah, it does seem like that, and again, that is an interesting talking point because here's the thing, Kenzo, is if rate cuts are not coming as soon as people think, does that challenge the idea that the stock market can keep going up? And before you answer, I'll just give you just my quick take. I think that the answer is no. The stock market doesn't need a plethora of rate cuts in order to keep going up. What it needs, though, what it absolutely needs is earnings to come in strong in the next few weeks. If you do not get earnings that come in strong, that might actually swing me to be bearish on the stock market, which I'm very rarely bearish. But if you have high inflation and the high inflation is accompanied with, well, it's high inflation, but the economy is strong and earnings are really good. Okay, I can actually be bullish on the stock market in that environment. Even though higher inflation, people might actually be investing more aggressively because of the inflation. There's a case to be made that inflation accompanied with strong growth, strong job, or strong earnings is a great environment for stocks. Like you can still have that scenario be just fine. The problem is, Kenzo, what happens if inflation is hot and then earnings disappoint in the coming weeks? Do you get bearish in that event, or do you at least just kind of cool on bullishness? What do you think?
Yeah, if we have a mixed earnings like that, it's gonna be bad. But for now, I like what you said. If the economy is doing good, it's not really bad for the stocks, because we
Yeah.
are coming from some very bad stuff. Yes, we want inflation to go down, but we still want people to get some jobs. As we saw last Friday, we had like a bigger number for NFP, which is actually great. But
Sure.
what is not really surprising is that once we have bigger number of employment, it means that slowly we're gonna have a little bit higher inflation, because now people, they have enough money to buy, because now people are working on the CPI side. It means we will see CPI trying to go up, and we saw that. And maybe on the retail sales, we might still see the retail sales going up. So on the stocks, that is also a good thing, because remember, inflation is also higher because prices are higher. It means their earnings can be way much better.
Sure.
You
Yes.
see.
Yeah.
So unless if maybe that is not going to be the point, but I think that these companies are making like serious money. I had a speech or statement from Biden. He requested these companies which are making money, please, why don't you just cut your profits, because inflation is very high. That shows that they are actually making money. They don't really care about inflation, because that actually gives them a chance to increase the prices. So when they cut the rates, they're no longer actually going to reduce the prices that much. You see.
Yeah, and Kenzo, not to even get too political about it, but sometimes you hear politicians kind of getting mad at companies for raising their prices. And I've mentioned this before. That is the most gaslighting thing in the business world, because businesses are competing with one another to have the best possible prices. They are selling
Yes.
their products at what the market prices them at. If everyone's out there buying the prices that they're listed at, that's why the prices are there. Not only that, the prices aren't up because businesses are being greedy and just raising their prices. The prices are up because because the government has printed up $1 jillion into the system. Of course, the value of the dollar has weakened, so prices in the
Yes.
store goes up. Is it frustrating for all of us? Absolutely. Yes, it is. It's very annoying to go to the grocery store and it's like a sticker shock every time you go there. But it's not the business's fault. In my opinion, it's more on the government being reckless with spending. Anyways, we could go down that rabbit hole for 16 years. But for now, in terms of markets, where does that take us with the dollar? Because I saw you had the dollar index pulled up here a moment ago, Kenzo. What do you think about the dollar? I mean, inflation seems to be sticky here. I've got this chart I keep pulling up on the screen. I think it's a really interesting one, especially for our currency trading friends in the audience. You know, here's European inflation, which is coming down pretty steady. And I've drawn this several times. So for people who have seen me say this many times, I apologize. But US inflation has stalled out. And in fact, in recent times is actually ticking up a bit. Does this make you more bullish on the dollar seeing this story?
Yeah, on this one is a bit confusing, because now once the dollar is getting, especially this aggressiveness that we see, obviously anything that has to do with the dollar, it might end up struggling, especially on the currency pairs, not actually the stocks. So, but the problem is we have these meetings or the news or events every now and then. Things might change very quick, because we can hear the story. They're still saying that they still expect to cut the rates. So which means they don't really want to make the dollar to go stronger. But just because investors, they can see that no, if inflation is going up, it means they can't just cut the rates like that, you see. So I think it's a bit confusing, but the best thing sometimes is just to follow the market structure, because sometimes we can get consumed in this news. You will end up not trading, you see, because every day there is a breaking news. So sometimes you just have to focus on your technical and see what's really happening, but still you have to be up to date, because things might turn very quick.
Where are you at with you know, the S&P, the NASDAQ? I feel like we've been range bound. I've mentioned this. I'm not bearish unless you get, you know, a clear break of the lows. And in terms of NASDAQ, you know, as we just talked about, I think it's just waiting for earnings season. If you get strong earnings, we could go higher. But if you get disappointing earnings, we also could go lower. So it seems like that's what the market is thinking too, and that's why it's range bound. Is that fair to say?
Yes, exactly. Yes, we can easily see that the overall movement or the overall direction, it's actually an uptrend. But now you can see that the market is just actually ranging. yes, maybe you can just play around, maybe buying around these levels, but we can easily see that the market is actually ranging around this level. So which means we need enough push to push this market to, or enough momentum to actually continue on this uptrend. Yesterday, the market did try to push to the upside. Now I see a reversal. It seems like this is going to stay here longer. As you said that there are earnings, I think that maybe will be the most important thing to just move the market. At the moment, yes, the market shows us that it's still positive as we are on this uptrend, but we need that fuel to push the market. I think as long as we are here, I will still think about this uptrend, unless if maybe we break out of this ranging structure. Maybe I'll say, yeah, it's time maybe to look for a sell if things are going to be bad.
Sure. Yeah. And I also wanted to call attention to something in the audience. Kenzo, this is relevant to us while we're talking stocks, is JP Morgan's earnings came out this morning. We had several banks report here, and you can see this is possibly one of the factors that's bringing the stock market down this morning. Is you have JP Morgan coming out down 5% on the day. I mean, this is the leader, right? The leader of the banks world is JP Morgan for sure. Coming down here on the day. Seems like earnings were fine, but must have been some sort of guidance or something forward looking that the market really did not like. At the same time, you have Goldman Sachs down 1.7%. You have Morgan Stanley's been selling off. And we could also take a look at KRE. These are your regional banks, and regional banks have not been doing too hot recently either. So perhaps some jitters coming into the market around the financials that are reporting here this week. Today kicks off really earnings season. So it will be an interesting time. And again, VIX up 13%. That's warning of something. I think there's a couple warnings in this market right now that you can't ignore. You got the VIX screaming higher. You got gold screaming higher. Oil's up 2%. I mean, I don't know. To me, it's not that I'm bearish per se, but this just makes me very cautious. As we've lost that upward momentum, we're still in an upward trend, but we've gone sideways. I'm just, like I said, Kenzo, I'm waiting to see if we can break, or if we break lower. What would get us to break higher? Probably strong earnings. And again, that's why it just comes down to that right now, I think. So we'll see.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.